right, talking about Smuckers today. SJM on New York Stock Exchange. This has been a good company for us. We've owned it for quite a while. Shares haven't been great in the last, let's say 2 years, kind of flat, a little bounce around, but basically flat. And I always think it's just not getting the respect it deserves. The numbers are actually pretty good, although I do see why some other investors might not see it the same way that we do, and it's basically because sales have been kind of flat. I mean, obviously not the best, but the return on capital has been great, and if you can just move those sales forward a little bit, the cash flow of this company is pretty good. So sometimes you got to wait a little bit longer with other investments, and this one is one where we've needed to be patient. Fortunately, it's up 8% today on really good earnings. So earnings coming out, let's see, we got the summary numbers there. Revenue was up 10.7% from a year ago, which is great. Beat expectations by 8.2, and then the earnings line was even better, up 51.9%, and beat earnings estimates by 29. So obviously very good. As I said, we think this is a good company. Let's jump into our model, and you'll see why. So right away, good return on capital profile, as you can see by our chart there, right? Just very consistent in the mid-20s. It's actually 26% right now. It is down a little bit from a few years ago when it was 29-30. But I'll take a company that can earn that kind of return on capital. A pretty good balance sheet. Got a lot going for it. So this is the way we view companies. We look at the return, see if the valuation makes sense, and obviously it does right away. But I want to point out that if we go to the financial statements, the sales numbers, okay? Go back to October 2018, 5% growth. That's okay. 2019 or January 2019, 5%, 6.8, minus 6.5, minus 3, minus 2. Now, so an investor's going to see that, especially a quant model, and they're going to say, "Oh, declining sales." But they were purging some of their assets, some of their brands. They were selling them off. So of course your sales are going to go down. And they were getting cash for that. So that's fine. And then in April, we see a 10% bump. That was largely due to COVID, as is this quarter. We don't have this quarter in yet. It just came out. We'll probably get that in a couple of days. So we saw rising return or rising sales. Most people so far up until the April quarter hadn't seen any sales improvement, and I could see why you might want to stay away from that. But what we say is, no, that is such a good return on invested capital that they do it very consistently. It's worth it, right? It's totally worth it. And, valuation is there. So, sales are a little bit weak for a time being, but they're still giving you good results in terms of cash flow. The dividend yield is 2.88. Let's take a look at the dividend chart. And you see they raised the dividend. Looks like once a year on looks like probably after Q4. They raise the dividend. This is the cash flow relative to the dividend. It's a 36% payout ratio. That's a beautiful looking dividend chart. So you got the dividend going for you. You got good valuation. We're finally getting some upward sales. Is it sustainable? Debatable, let's call it, because it certainly is due to COVID and pantry stashing, I guess. But it's a good company anyways. We would like to see higher sales. They start posting 6, 7, 8% sales growth. This stock's gonna take off for sure. While I'm at it, see I got my Raptors blazer on today. Give a shout out to Freddie and Pascal. They do this commercial for Smuckers, and Raptors just won their first round over the Brooklyn Nets, and they got Boston coming up on Thursday. So shout out to my Raptors. And that's a wrap on Smuckers. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.